Okay, with Chapter 8, we start a tour of the balance sheet, and we start in the upper left-hand corner. So we begin by looking at cash. And cash is our most liquid of assets, and probably the one we have to be most careful with because it can be easily stolen from us. So we should have systems in place to protect our cash. In fact, according to the Sarbanes-Oxley, we have to have these systems in place if we're publicly held. Systems like segregation of duties. We don't have the same person approve the bills, pay the bills, then reconcile the bank account. And we'll also have physical controls in place. Things like we'll have pre-numbered checks, pre-numbered invoices, pre-numbered purchase orders, so we can see if any are missing. But one of the most important tools is to reconcile the bank accounts every single month. And what do we mean by reconciling the bank account? We mean that every month we look at the bank statement, and it's going to have one balance. And we're going to look at our records, and it's going to have a different balance. And the reason is the bank statement doesn't know everything, and our checkbook doesn't know everything. Once we tell the bank statement everything it doesn't know, and once we tell our checkbook everything it doesn't know, we should end up with the same number, and that's the correct or adjusted balance. So let's pretend it's the first week in May, and we're reconciling the bank account as of the end of April. We open up the bank statement either online or from a piece of paper, and the bank tells us we have $1,000 in our checking account. We thought we had $1,028. We have to reconcile those numbers. So let's tell the bank statement what it doesn't know. Well, if we mailed in a bank deposit on April 30th, we wrote it down in our checkbook as made, but they don't know about it as of April 30th because it hasn't shown up. Or maybe we put it in the night deposit on April 30th. Whatever reason, it doesn't know about that deposit in transit. Deposits in transit mean deposits that we've recorded on our books but hadn't arrived at the bank at the time that they prepared the monthly bank statement. The bank also doesn't know about outstanding checks. We know we wrote them. We wrote them down, put them in our check register, but they haven't cleared the bank yet, so they don't know about them. So we have to subtract those. And finally, the bank doesn't know about its own mistakes. So in the upper half of this bank reconciliation, we're going to add or subtract the bank's errors. And once we discover the bank errors, we call them up and inform them of their errors. So you take the balance that was on their statement, you add the deposit they don't know about, you subtract the checks they don't know about, and you end up with a correct or adjusted balance of $1,050 in this example. So now let's turn our attention to our books. We said we had $1,028, and we have to tell our books what they don't know. And what they don't know can be broken down into two categories: good news and bad news. So let's start with good news. Let's say we earned some interest revenue in our checking account. So we have to add that in. We didn't know about that until we open up the bank statement. And so now we can add $2 to our account. The other piece of good news that only happens in accounting class is somebody owed us some money. We had a note receivable on our books. Our bank went out and collected it for us and put it into our bank account. So in this instance, let's pretend they collected a note for us that somebody owed us $100 on, and the bank also collected a $5 worth of interest for us. So we didn't know about that until we opened up the bank statement and we saw that there's an extra $105. Sadly, that's pretty much the end of any kind of good news you ever find in the bank statement. The bad news usually includes bank service fees. Our book likes to debit an account called miscellaneous expenses, miscellaneous charges. I like to break it out in a separate account so I know exactly how much my bank is charging me. So we didn't know how much our monthly fees would be until we opened up our bank statement, and so now we know we can subtract $25 from the balance we have on our book. Then the last piece of bad news that's in our bank statement is the NSF check. So a customer wrote us a check for $60. We walked down to the bank and deposited it, thought we had an extra $60 in our bank account and that customer didn't owe us any more money. But lo and behold, that check was no good, so we have $60 less. So you take the $1,028 that we showed on our books, $2 worth of interest that we earned, the $105 worth of principal and interest that was deposited by our bank, subtract the $25 service charge, subtract the $60 bad check, and you end up with $1,050, which ties to that number up there. And the last step in the reconciliation process is to update our books. For all the good news, we're going to be debiting cash. For all the bad news, we're going to be crediting cash to reflect the fact that we had less cash than we thought. So in summary, cash is probably our most vulnerable asset. It's so easy for people to steal it from us. So we have to have systems in place to protect it. And we're going to reconcile our bank account every month to check and see if any mysterious amounts are disappearing out of that account.